Okay, welcome back to Trading with Market and Volume Profile course. We're still unit number 15, trade strategies using TPO and volume profile. Now we're going to talk about level sweeps and reclaims. So this is a strategy that I think is very useful. It's a strategy and a concept. And this is especially useful when you want to minimize your risk. And for that, let me bring up a blank screen. And so if we see over here, a lot of times, for example, let's say we have a market that is doing something like this. We have a clear support level, and then we had a breakout here. So we have this, area of resistance that was broken. So we see this and we're like, oh, if this pulls back here, this is going to be an excellent level to get long. And definitely this looks like a very good area to get long here because you made a new higher high. You broke this resistance to the upside. So now you're looking for a pullback area to get long. And this definitely makes a lot of sense right on this broken resistance, now expected to be support. But in reality, we know that in trading, nothing happens, always the same way, and nothing happens perfectly clean all the time. So a lot of times what we're going to get is a much deeper pullback, and we can even come and test underneath this support levels, getting in and trapping a lot of late shorters here, impulse, breakout traders, etc., just piling in short only to then have this quickly reverse and start coming back. So for me, this is one of the best types of trades there are, simply because this is going to allow us to set our risk or our stop loss, let's say, very tight. So what I'm looking for when we have scenarios like this, like I said, let me put in and let me select another color right there. Okay, so we have this. So if I select right here, we can mark off this level. And so if market then starts coming down here, we don't just blindly, try to buy this level, because there's no assurances that this is going to hold, especially if it's a level that's been tested several times already from the same side, which is going to start weakening it. But if we see something like this, and then this level comes back and starts holding on retest, this is our key area to get in. And obviously, context is very important. If this is a very historical support level, if we have a high volume node here and we're right around the bottom edge of a high volume node, for example, then we have our stop loss would go right below the bottom edge of this false break level. Okay, so then that'll let us have a very tight risk. And then in this case, I would first target this previous area of resistance. So this will be the target if we do get long, let's say, on this pullback, for example, as this is the first area where we would expect some kind of resistance if we're like around the top area, the top edge of a high volume node, for example, etc. Okay, so that's the basic premise of this false breaks, is that we are looking for a move above or below a significant level where we would expect support or resistance, and then the market comes back over that level and starts holding it, because we expect a lot of traders to be trapped in those areas. So here's an example in the S&P 500 market, the 1 hour. You can see we had an impulsive move up. We started holding for 2 days. This is Monday, Tuesday. We held as support here, and you can see over this entire week, this was the last week low. Remember, again, we talked about significant contextual levels. So we always want to pay attention to yesterday's high and low, last week's high and low, last month's high and low, etc. So here we have the low from last week, which held as support for 2 days. Market makes a very impulsive move down here. We break this hourly candle below the level, but then we come back and now we retest it and start holding it as support again. So then we have a bounce and we break above this high. So you can see microstructure here. If we go into a lower time frame on this area, you can see we're putting an impulse triple drive to the upside with momentum to the upside. We're making higher highs, higher lows. So then we clearly can put our stop loss right below this level. And then we expect some kind of squeeze as long as this level is now holding, which you can see has been a historical support and resistance area. Okay. And, then for targets, we would use different concepts. Like here, you can see we have a singles fill print in here. We have singles right over here. So that could be a first target into filling this singles right over here, or a more conservative area to scale out a little bit would be this previous support broken. Now we could expect some type of resistance, etc. Okay. If we look at this same example, but now through the eyes of market profile as well, you can see we have here Monday, Tuesday, the lows here that are holding. Then this is the day where we have the breakdown below that level. So if we zoom in now, this is a 2-day composite of Monday, Tuesday. We have the low from last week as well, which is the low from this composite here. And then we have here the break below, and you can see we broke below and we closed the day exactly at that level. And then on the next day we opened right on that level holding, and then we had this 2 pullbacks that held as support, and then we had the breakout to the upside. Okay. This is another example in the euro US dollar, and we actually have a double example right here. You can see we had this double low here, very impulsive move down, and made another double low. So you can see all these concepts are what we call fractal, meaning this is all reflected on all different kinds of on all different time frames and markets. And you can see right here we broke back above, and there's a tiny pullback here that held. Then here we claim back above the level, and then we retest and held, and then we start pushing up. So in this case, we could, if we get long, let's say when we reclaim this, we could have our stop loss right below this low. As soon as we break out from this resistance here, then we can move our stop and tighten our stop into this level now, etc. And this is the same view on the market profile again. So we have the lows here, and then you can see how we come back above, test that low, and then we just keep on going. And then as far as targets, well, we have a very clear target right over here. You can see we had all this single prints, a very weak, low volume node structure into the ledge of this high volume nodes. And also we had the low from this day. So we have a lot of context for a target right into this level. Again, first we use this as our invalidation. As soon as we start holding, pushing up, then we can move the stop loss up into the main level that we are tracking, that we reclaimed, for a push up into those areas. Okay, now let's go into the charts and see some examples as well. Here we have an example in the SP 500 futures. This is the 5-minute time frame. And you can see we had our regular profiles here, regular session volume profiles, and then in blue, the extended hours. And we clearly had a low right here. Let me mark it off. Let me make it purple. This is the low from the last day's regular trading hours sessions. And then down in the extended trading hours, you can see we also had a low right here, which these levels proved to be very significant support levels during these sessions. And then right over here, you can see we have this break below the level, and then we had a super impulsive move. Now this is a news-driven event, this whole move up, so that was why we had so much volatility here. But we can then use these reference points, yesterday's low and then last extended hours sessions low, as our key levels. You don't have to wait when you're trading this style of level reclaims. You don't have to wait for this to give you a pullback entry to then get in here. You can also just look at this, and as soon as you see a strong breakthrough, you can just get right in whenever you can, right around the level, knowing that you are going to have your clear invalidation below the false, in this case, the false breakdown low before we reclaim these levels. And then you're going to use these levels as your guide to manage your trade. Looking at this from the market profile perspective, we have here again, this was the regular trading hours session low, extended hour session low. Then this day we came down right into the low from the extended hours. We bounced, we had some chopping around, then we came into the low from the regular hours. So you can see even right here, you got two significant bounces from the lows of the two previous session profiles. And then you had this third one right over here. So we also had a triple drive, meaning 1, 2, 3 steps down, which is one of my favorite reversal patterns. 1, 2, 3. And then we had this very impulsive reversal. So pretty much I will look at this whole area. And as soon as we are back trading above this zone right here from these lows, this is my clear invalidation, and now I am leaning up. You can see that there was actually a poor high here on the extended trading hours, so that could have been a first target as a repair for this poor highs, which we're going to talk about a little later. Then we had the high from the regular trading hours as well as the next target, etc. But you can see how with this technique, instead of just blindly trying to buy a level of support that you expect to hold, you wait for the market to show its hand by having a reversal and then accepting and respecting again these levels of support in order, in this case, to get long. Okay, so that's pretty much the premise of this pattern, and I will see you all in the next one.